beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng, though, is a bit of an underperformer today, down 1%. The Taiwanese index is up close to 2%.
24,027 is the 20-day moving average for the Nifty as of yesterday's close.
Keep an eye out on the broader markets as well, because yesterday the breadth of the market was spectacular.
8 points lower on the Nifty. The sensex is down a little bit. Maybe, nothing actually. It's flattish.
Given that some tariffs are being imposed, we would not expect Fed cuts over the next few months.
Muted day coming in terms of a performance. Nifty down almost 0.8%.
We are going to have to see if that true production has already started, whether it is underway.
CDMOs, CRDMOs will benefit in India.
Navy deployments on sea and the Army deployments on land remain on high alert.
It's a 300-point cut as far as the Nifty is concerned.
Well, it is still a 300-point cut on the Nifty, so 340 to be precise, 24,580, 24,600 broadly is where we're at. So, taking a bite out of the outsized gains that you saw yesterday. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, very amused Surabhi and Nigel.
You know the reason, right? If I'm amused in the studio, more often than not, this guy's the reason.
What happened?
He was taking the bite out of yesterday's game. So you do it again for Prashant. Huh? Taking the bite. Bite out of yesterday's big move.
But though the markets are down, the headline index is down, but select portfolios will still be feeling good because the breadth of the market is still positive, 2:1. So maybe, in fact, the bite is not taken out there.
Did you do it with his mouth or hands?
No, it was just a bite. So maybe after lunch, right? So maybe. Okay, guys, let's get back to the market. But on a more serious note, Prashant, what's your thought around this? That is this just slight normalization given yesterday was this monster rally?
Yeah.
Or does this kind of reflect that maybe it was a bit excessive because it wasn't backed by too much of cash market buying? It was more like we were discussing, right? F&O market action.
Yeah. So, I'm still thinking that tactically the market goes up rather than down. That's essentially my view. It was, 3.5% gain in one day. And you're giving back about 1.33%. It perhaps is maybe more than what one thought you'd give back, but it is what it is. So that's the way I would kind of look at it. At the margin, I was wondering whether this India-Pakistan is still lingering in some way, right? But not really. I don't think people are really... I think the response from the government, the armed forces, Prime Minister Modi himself yesterday has been extremely strong, has been very, very... and I think as emphatic as it can get. So there's not really anything new in that sense, which perhaps is worrying the market at the margin. The question is, will conviction really come back? Will long onlys come back with full force, with full vigor? And I think we'll wait and find out. But as I said in the morning as well, maybe a little bit of pullback after the monster move yesterday, but tactically, maybe it's still risk on and you'd look for ideas to buy at this point in time. Guys.
Okay, let me just quickly then recap what is off on the red side today in this 350-point drop. Some of the stocks are already on your screen. Let's actually get that contribution played back on because it's IT and there is banking. These are the two vectors that are moving to the south side today. IT is, of course, correcting after yesterday's big move. IT was the biggest beneficiary of yesterday's rally. And today it's Infosys, TCS, Wipro, the entire set. It's all stacked up on the lower side. And then there's financials. HDFC Bank, they're contributing 60 points to that downward move. ICICI Bank is also weak. But even beyond that, now that's the contribution. Even beyond that, there are names on the consumer side like Tata Consumer, ITC, Trent. They're all seeing a correction. Eternal is down about 3% as well. So consumer is weak. You have to take that on board. And even leaders like Mahindra and Mahindra, leaders of this market for the past year and a half, even there's a little bit of a cool-off coming in. One sector that's worked well today is actually Pharma, because the market seems to have taken that view that this executive order on lower drug prices in the US, it won't bite Indian pharma companies maybe as much. It's not going to be that onerous. That seems to be at least the wisdom, the market wisdom in the view right now. And then there is defense. Very clearly, that's still the sentiment, that's still the favor, the flavor, whether it's a BEL, HAL. We'll be looking at HAL's numbers also soon enough. So a lot of these stocks on the defense side are still having a good day. That's defense index. And many of the constituents are up and about in green today.
Well, there are select stocks and sectors that are still reacting to news. And from the broader markets, you need to pick a stock like TD Power Systems, which is a mid-cap name, but that's up close to around 10%. The con call, I think, just got over. And that stock has, in fact, now moved to the high point of the day. Star Health, the stock is, I think, less than half of what it was at the IPO price, or at its high, actually. I remember it being at around 900 rupees. But in today's trading session, Sunny is seeing a bit of a volume spurt, though the stock has come off the high point of the day. So there's plenty of buzz on that particular name. A few more names talking about some of these other defense names that are moving on decent volumes. You have Centum Electronics. I recall a couple of large trades at around 1,400-1,500 rupees odd. Now the stock is a 2,000 rupees stock. Centum Electronics is the one that I'm talking about. Big up move. Well, Gale's numbers as well flashing for you on the screen. The numbers look a little lower actually on the net profit number. But if I look at the margin performance, it's actually looking better. So the margin number should come up for you in comparison to our poll a wee bit better than what we are working with. If I saw that correctly, it was at around 9%. That compares with around 8.8%. So the EBITDA number has moved up by close to around 13.3%. Let's find out what do you do, though. On the Nifty, we have Nagaraj Shetti of HDFC Securities who joins us on the show. Hi, Nagaraj. Good afternoon. Good to see you win. The markets are down 350 points after having a monster rally yesterday. Par for the course, you would say. Will you be looking to buy around these levels? Or do you believe the market wants to go and, maybe correct a little bit more?
Hi, good afternoon, Nigel. Market is showing consolidation after a stellar move yesterday. Though there is a strong resistance around 25,000 odd levels, market is showing some kind of a volatility at the highs. I'm expecting this is going to be a buy and dips opportunity. At the lower levels, 24,500, 24,400 is going to be a strong support. And I'm expecting an upside bounce in a day or two. Even Nifty could reach towards the 25,000 mark, which has tested recently, just below that in the next at least 3 to 4 sessions.
Stocks, Nagaraj?
Yeah, I have two stocks from my side, one mid-cap and the other side. Ujjivan Small Finance, the small finance banks were in a stellar move recently, and this one too has moved up after forming a higher bottom around 40 levels. Currently trading around 44, one can look to buy at this point of time. 48 is going to be the upside target for that in the next couple of weeks, and one can place a stop loss at 41. Second one is the NBCC. NBCC was in a consolidation phase in a range-bound decline. Recently, it has witnessed a sharp upside bounce from the support of around 90. Currently trading around 101.40 odd level. One can look to buy at this point of time. The upside target would be around 112. One can place a stop loss at 95.
Okay, all right, got that. Hero MotoCorp's numbers coming in largely in line. You can say maybe a shade above, at least on the revenue front. It's slightly higher. The margin is also in line with estimates. So Darshan's poll was saying that the margin should come in at 14%. I think it's flashed by just at that. And the profit number is absolutely in line, I mean, pretty much 1,081 versus a poll of 1,089. So this is looking quite steady. Let's see if we can get, revenues up 4.4, which is slightly better than estimates. Volumes in this quarter were down 1% for Hero. It wasn't the best of quarters. Year on year, there was a decline. And quarter on quarter as well, the total volumes for Hero were down about 6%. So that way it's been a bit subdued. That's Hero Motor. We'll discuss this with our fundamental experts as we go on in the show. But for the time being, let's put the spotlight on the big story around Pharma. US President Donald Trump has signed that executive order. The mechanism will let patients buy drugs directly at most favored nation prices. Ekta is here to decode the impact on Indian pharma companies. Today, pharma stocks, Ekta, are heaving a sigh of relief. Tell us what this all means.
Well, yes, it's definitely a positive which has come in because the executive order which is signed by Trump was actually not as binding as the street was anticipating. The mechanism is which they are focusing on is to let patients buy drugs directly in the most favored nations' prices mechanism. So now the US drug prices, he's gone on to say in the executive order, is 3x higher than in other OECD countries. Also, the US funds 75% of global pharma profits despite being only under 5% of the population. Americans subsidize foreign discounts through inflated domestic prices. So these are a couple of key issues which he's really focused on. So like I said, the US pharma stocks as well as the Indian pharma stocks have been higher because the executive order is not as binding as what he had proposed in April 2020 and which was then shut down by the courts. The order is focused on patients who want to directly buy drugs from manufacturers, and only around 8% of the population is not covered by any health insurance such as Medicare or Medicaid as per Macquarie. Now the focus, according to experts, is that is going to be on big pharma as well as innovative drug companies. His aim is to basically equalize pricing of patented drugs available in Europe as well as Canada, and aim is to eventually remove the middleman in terms of drug pricing. There is no direct fallout on generic drugs and biosimilars as of now. The street is expected to wait and see what happens with the tariff position that he has on pharmaceuticals, which could probably have a greater impact when it comes to generic drugs. Macquarie did speak on Sun Pharma. Remember, that stock was in focus yesterday. 20% of sales come in from specialty drug business, and 80 to 90% of that is from the US. And Illumia is one of their key drugs, which is basically a part of which has Medicare exposure. But because of this particular executive order not being as binding or as harmful as anticipated, Sun Pharma and the other stocks have seen a recovery.
Okay, all right, got it. That explains it. Sun Pharma, remember yesterday when this news had first come through that there is an executive order coming, Sun had fallen almost 5-6%. There was a mild recovery by the end of it, but it still had ended lower, over 3%. Now that the fine print has been understood by the market, it seems that it's not going to be so onerous and so bad. In fact, we discussed this with Macquarie's Kunal Dhamesha earlier in the morning. Listen in to the Macquarie view.
The way I would put it is the final executive order, which we saw yesterday evening from the US president, it's a much diluted version of what he had put out in September 2020, which, as Mr. Vaidhi said, eventually faced legal challenges and was withdrawn by the Biden administration. But the yesterday's version was much more diluted in a way that, the focus is on patients who directly want to buy drugs from manufacturers. They will get the drugs at the most favored nation pricing.
All right, so that was about the piece of news that came in overnight. But we have news flow coming in on Cipla, which came out with their set of numbers. And Suvin, they're doing an issue to a couple of non-promoters as well as the promoter entity. Ekta, run us through that piece of news.
Well, yes, Cipla is in focus on account of its numbers. So the revenue was up around 9-odd%. It was in line with expectations. Margins came in below what the street was anticipating at around 22% versus estimates of around 24%. Profit was higher because for lower tax this quarter. But what stood out was that the US business was $221 million. Street was expecting $218 million. So that was okay. India was a bit lower than anticipated. It grew at around 8-odd%. Street was anticipating around 10% growth for India. So those were the Cipla numbers. Lupin was in focus because they've launched tolvaptan tablets in the US. Remember, they have exclusive first to file status on it. They have 180-day generic exclusivity on it. It's used to basically slow down the kidney function decline in adults. It's a big drug, around $1.46 billion in terms of market size, and it could possibly contribute around $150 to $200 million for Lupin going forward. Suven Life in focus because they will be issuing up to 6.4 crore convertible warrants on a preferential basis, raising 857 odd crores. And this is going to be to promoters as well as non-promoters. The promoters, Venkat Jasti is probably going to put in 425 crores via this, and they are going to issue warrants to non-promoters including Quant MF, Tejas Trivedi, Apicus as well, and Prashant Jain. So that's the reason why you're seeing the stock in focus today.
Okay, all right, got it. Thank you very much for that, Ekta. Well, with that, let's focus on Hindalco. Now, Hindalco has been... Okay, before we get to Hindalco, Nigel will tell us a little more about those Novelis numbers and what's the read-through. But before we get to that, we have Deepak Shenoy joining in. Deepak, good afternoon. Great to have you on. So a bit of a pullback today, given the mega move yesterday. Let's talk about some of the earnings that have come in. Fag end of the season, there's Tata Steel that came in. Hero Motors numbers are looking flat. The quarter was itself fairly muted for them. Anything that stands out for you last 2-3 days of earnings?
Nothing major. I think we've been more consumed by geopolitical news than fundamentals. But since the year end, I think some of the steel numbers were good. I can't talk specific on stocks, but I think overall in the two-wheeler space, the leadership seems to have changed. In the four-wheeler space, the leadership seems to have changed as much as we're seeing the earnings and results combinations. We're also seeing decent numbers from a lot of manufacturing companies, companies in the electronic space, companies in some of the other manufacturing areas related to defense as well. I think some of these numbers kind of coincide with an increasing focus on domestic manufacturing, domestic consumption as well. But by and large, I feel like this has gotten overshadowed by more geopolitical issues, tariffs, and international news. But after the end of the results, I think we'll have a better picture. Right now, things look quite decent overall on results front. Last few days haven't been any major aberration in that sense.
All right, Deepak, I wanted your view on the metal stock since you said that a couple of those steel names did well. Hindalco, in fact, from the non-ferrous space, well, that came out with its set of numbers. And in fact, the numbers looked pretty okay because shipments on a year-on-year basis were flattish. However, on a sequential basis, they were up between 5 to around 6%, which is good news. So the sales numbers, there was some improvement that we saw there. Pricing did play a role as well. But the adjusted EBITDA on a year-on-year basis, it did see a decline. But that was on expected lines. The point is that the EBITDA per ton, adjusted EBITDA per ton, has seen a good jump up on a sequential basis. Remember, Q3 was a washout. That's a softish quarter because you have Christmas and other holidays in the western part of the country. So that's why we did see the EBITDA per ton get smacked back. But they had guided that Q4 EBITDA per ton will be as good as Q2 and bang on. So that's why these numbers go down pretty okay. The debt number as well was really unmoved, on a quarter-to-quarter basis. They have guided that the capex for this year will be around 1.8 to around $2.2 billion, which is also in the price. Then what was the issue if the numbers are more or less in line? Then why is the stock down in today's trading session? One is it's a bit of a risk-off day, and yesterday the stock ran up, so that could be one factor. The other factor is they are factoring in a $40 million per quarter hit because of the tariffs that were implemented. So on a quarterly run rate, it will be a $40 million hit. The other point is they have withheld their guidance for volume as well as EBITDA for the year. So the street didn't like that. There is a bit of uncertainty in short. And that was the point. Brokerages, though, they remain fairly positive on the stock. Both Nuvama as well as Equeris, they have a buy as well as an add rating on the stock. So numbers in line. The guidance is a little bit disappointing and it's a bit of a risk-off day. So that's why we're seeing some profit taking. Deepak, your pick from the metal pack. Do you like ferrous or do you like the non-ferrous names?
Honestly, I don't like either. I find metals very boring because they're a very cyclical commodity. I can't talk individual stocks though, but there may be some short-term opportunities in some of them, especially because there is some news around tariffs that could be changing quite dramatically how the results will be going forward, considering tariff numbers are shifting. Therefore, I don't think we should play these in the long term. In the end, we have to remember that both in steel and in aluminium, we have considerable competition from the largest manufacturer, at least in steel, by far, and by other countries like Korea and Japan as well. So if you expect that America is going to be putting tariffs in at some level, India is already going to have to start putting in safeguard tariffs to protect our economy, but also expect that a lot of other countries will see flood of inflows from China / Korea / Japan because America becomes relatively less accessible. So I think longer term, this is not a great story to play with. Very volatile news. I'd rather follow the price on these stocks in the short term rather than play them longer term.
Got that. Well, let's just quickly run you through the hero numbers, right? Sudarshan is here with a quick snapshot view of first cut, as they call it. on Hero. So take it away.
So by the first look, earnings are looking much better than estimates, and it looks like what has worked for the company. The recent price hike that company had taken has helped company improve its realization. We were expecting realization to improve by 3% year-on-year, but company has reported an increase of 5%. Even on a sequential basis, it's up 3% versus expectation of 1%. Even if you, and when you look at the headline numbers, those numbers are also looking slightly better than estimates. If you look at the profit, it has come at 1,081 crore. We were expecting almost at the similar line. Revenue has come around 9,940 crore. We were expecting 9,700 crore. So here, company has reported revenue higher than expectations despite volumes falling both on a sequential basis as well as year-on-year. EBITDA too has come at 1,417 crore versus expectation of 1,362 crore. And margin too has come at 14.3%. So it's good for the company that it has held on to margin above 14%. Now, what will work for the company in the Q1 of FY26 is the number of marriage dates this year is more than what we had in 2024. And with Hero Moto being the leader, especially in 100cc segment, we are expecting a healthy Q1 FY26. Even company is saying that going forward in the near term,
Sudarshan, I think we just lost your audio out there, but we got the gist of it. Let's see, we'll get Sudarshan back, maybe in a bit on Hero Moto. That's commentary coming through from the management, and that commentary at least is being well received by the market. They're talking about growth in the 125cc category. Do we have Sud back? If we do, let's see if we can finish that point. Yeah, the stock is reacting really well. So back to you. So is it the commentary? Is it the fact that there's no disappointment? What do you think is working for Hero Moto?
Besides earnings, what will work for the company in Q1 of FY26 is first, Hero MotoCorp is the leader in the entry-level segment. And this year in 2025, number of marriage dates is more than what we had in 2024. So if the demand company sees a recovery, the biggest beneficiary amongst all the two-wheelers is going to be Hero Moto. It has almost 30% market share if you look at the entire two-wheeler segment. But in just in 100cc, it holds market share more than 50%. So with more number of marriage dates, it's going to benefit. Also, companies saying that it's optimistic on the outlook in the near term.
Okay, all right, got it. Sudarshan, thanks very much for that. Deepak, before we let you go, just your thoughts on how to play autos. In the morning, we caught up with Ather. I mean, that's on the EV side. They're talking about reducing losses going forward, talking about building on the market share. There's Hero. You know, it's a question of what you want to do here. M&M has been the clear leader, but beyond that, would you keep auto in the portfolio? How much, and how would you approach it?
So I believe, honestly, Surabhi, that India is under-penetrated in a lot of ways in terms of transportation in general. I think India will see a lot more four-wheelers being sold, a lot more, possibly back to the 2018 levels of two-wheelers being sold. By the way, we have not even reached those levels even now, I think, in terms of two-wheeler sales. Ever since that Supreme Court asked, for mandatory insurance and the sales fell, we haven't seen those sales recover, at least for some of the top companies. But we're seeing a difference, a shift. India was always thought to be the place where the cheapest car would sell the most. Some of the largest selling cars are now SUVs, and they're not cheap. They're not the cheapest car. I think this will happen in the motorcycle area as well. And perhaps EV will have a small dent, but it'll take 10 years for EV to come in meaningfully. But I believe here that the premiumization of the motorbike will also kind of happen in the next going forward. So it may not be the leaders of the past that will take the mantle in the future. So you should be, I think, cognizant of that. But I'm very bullish on auto as a whole. India does not, we don't have enough public transportation, especially outside the cities and perhaps even in the cities. And therefore, people need private transportation in order to kind of survive and get to places. As India develops, I think there will be more. And perhaps the focus will go beyond just marriages. because the people need to commute even if they're single. So, I think that is something that I'm long-term bullish on. Unfortunately, the data in the two-wheeler space has not proved me right at all. We have not had any meaningful growth, though some companies have done significantly better than the others. I believe the broad industry will do better, perhaps, hopefully with the tax cut this year, some of it will start as well. But long-term, very bullish on auto. I think it deserves a position in your portfolio.
By the way, this India-UK FTA, a lot of I think I saw it on social media. I've not confirmed it, but Tata Motors is high-priced cars, Land Rover, etc., which right now, when you get it down to India, it costs whatever 80-90 lakhs or something. The cost basically goes down to half of it. I mean, all those cars become, in a way, competitors to... So, in a way, competition increases. Would you agree? Have you looked at that, by the way, Deepak, in any way?
Yeah, I mean, I think coming down from 90 lakhs to 45 lakhs still makes it compete mostly with, the pricing of, a lot of the Volkswagen cars and some of the mid-end SUV cars, which would actually still be higher than most of the high-selling SUVs in India, which are between 15 and perhaps 30 lakhs. I don't think anybody's coming there. And there will be some limits, volume-based limits on these duty exemptions. It's happening for the US for sure. It's I don't know whether the UK FTA has that, but I believe that while these cars will become slightly more affordable, they will still be only afforded by the richest part of the segment, which is where there's volumes, but the volumes are relatively small. It's in the thousands, not in the lakhs. So I would say that, some impact, yes, but not meaningful. And I would, of course, love these cars to get cheaper, but I think I'm not the audience that makes the GDP here change in any meaningful way.
But 15 lakhs, you get SUV starts 15 to 30. I think the starting is 25, right? 15 lakh में तो गाड़ी नहीं आती है.
नहीं, I think आप थोड़ा सा मतलब आप high-end SUV देख रहे हो. You are seeing the higher end, but there's Nexon and all that available, which is a mini SUV of sorts. The M&M cars are available. The XUV700 is about XU700 is about 30. Of course, if you look at the foreign names, they're at 45, 50. But I'm talking of the Indian name manufactured.
Yeah. Any thoughts on Pharma, Deepak, as a space? All this news flow, and we've covered quite a bit of it.
Yes, it's quite interesting. I mean, if you look at Ozempic, it's sold at $1,000 a month in the US. It's sold at $120 or $150 a month in the Netherlands. So obviously somebody in the US is unhappy and maybe they wanted it and therefore decided to do this executive order thing. But it's relatively mild. It's almost like, please bring down the prices. Otherwise, we'll do some more action. But for India, it might not affect directly right now. I think it will be an indirect impact on some companies which have more of these generics going around. Though I don't know, if this is actually more impactful to US pharma companies and to European pharma companies who generally make a lot more money in the US. And the whole healthcare system in the US is ridiculous. I mean, it is just, a price gouging exercise and a profit making exercise of gargantuan proportions. Whatever happens here will go through a lot of legal challenges. So I think we should eventually focus simply on these companies trying to continue to build market share in the US rather than, or all over the world, rather than, looking at these current actions. They will take a lot of time and they will take a lot of attention away. We're not invested in pharma yet, but if prices were to fall considerably, I think maybe we will take a chance. But right now, not keen on making big entries in this space.
Okay. All right. Got that, Deepak. Good to have you on. Thank you very much for joining us today. You have a good rest of the afternoon. We look forward to connecting again soon. By the way, before we take a break, I just want to mention that on the mid-cap side of the screen, there's a lot of individual level action going on. Look at stocks like Bharat Dynamics, 10% move on this one. Look at Vishal Mega Mart, 7% on this one going on. IKS, the recent listing, up about 6-7% as well. Lots and lots of names. TD Power, Nigel has mentioned. Care on numbers. Care is reacting very well to numbers. up 12-13% last I saw. Lead, Travenues, Tech, Ixigo.
Yes.
Now that, travel is back and airports, at least most of them are, reopening. So that travel theme is also very, very strong. So, yeah, at an individual stock level, not a bad day.
Out of all the names you mentioned, I don't know what's happened with the IKS.
Yeah.
All of them are like, this one is a hockey stick.
Yeah.
Suddenly, 2 o'clock, it was at 1560. It's moved up 100 rupees since, in the last 35, 40 minutes or so. Actually, in the last 1 hour. So, yeah, it's a big move. I don't think numbers or anything came, right? Am I missing something? But that's a very large bump up on IKS suddenly. So, they work in the recent listing, and they work in the healthcare space. Providing services to hospitals, smaller hospitals, doctor-owned hospitals, etc. in the US. It's a niche kind of business which they operate in.
Just one more thing on Hero MotoCorp. Besides the numbers, being a little bit better, there were a lot of shorts in the system. That's another reason that the stock is spurting up. It's up close to around 2.5% or thereabouts. And I'll tell you what, the point is that actually in comparison to our estimates, a little bit better. Some sales notes are saying it's a little bit lower, but there are shorts in the system. So even a inline set of numbers to a mildly positive number is causing those shorts to get squeezed out. I think the realization as well was a little bit better. I'll tell you what, we'll slip into a short break. On the other side, we'll get you updated with some D-Street chatter. Don't go anywhere.
Welcome back. So like we've been telling you, at the index level, it's a quiet day. There's a bit of profit taking going on, but individual stocks, well, there's plenty of action beneath the surface. So let's go back to Nagaraj Shetti for some final trading ideas and thoughts. Nagaraj, just remind us index trades and levels to keep in mind, and any final maybe mid-cap ideas, because there are a lot of stocks bouncing around in the mid-cap arena.
Yeah, I think different stocks are moving up very well. MTR Tech is the one that was underperformed recently. It has been finding hurdle around 1500 levels. Once it breaks above 1500 levels, I'm expecting an 100 rupees up move around 1600 towards the next resistance, which is looking attractive at this point of time.
Good. Okay, so defense stocks, Nagaraj, is something that you're looking at. There were a couple of other names that we were just mentioning, and I'm just quickly checking this out with you. In case you have a view, there's Vishal Mega Mart. Some of these travel stocks are doing well. Care is reacting very well to earnings. And I think IKS you won't track because it's a recent listing. But any of these other names, and within defense, what's looking the best? Even IdeaForge, by the way, IdeaForge is suddenly now up 6-7%. I don't know if that makes for a trade.
Even VDL is continuously moving up. Chartically, we're looking very strong. Today placed at the 10% up more. I think the more upside is likely in the near term for the VDL as well.
Okay, all right. Nagaraj, thank you very much for joining us. Good getting that view and good getting that perspective as well. Markets down about 300 points, 24,615. Let's talk about IIFL if we can. And IIFL, of course, crossed the 400 rupee mark yesterday. So it's done well after sort of being completely bombed out. And it's adding more because there is an upgrade. Nimesh highlighted this pre-market. This is from HSBC. Nimesh, take it away.
Hi, Prashant. You rightly pointed out, the stock is reacting very sharply because after a very long time, you're getting an upgrade on a stock like IIFL Finance, and this has come from HSBC today. So they've upgraded the stock to a buy. They've raised the target price to 550 versus 380 earlier. So it's a significant upside even from current levels. Now, coming to the specific report, there are a few things which needs to be highlighted because of which the stock is reacted. And HSBC believes that the two key segments for IIFL, which is gold finance and microfinance, both have been struggling for the last many quarters. And now from here on, it looks like that's going to change. So they expect a recovery in the microfinance business. They believe that the higher liquidity in the system and also the lower cost of funds should drive the EPS going forward. So that's the key reason why they've upgraded the stock. They also believe that earnings are going to improve from here on. The only risk that they pointed out is the higher competition in the gold business, as well as in the unsecured loans. There could be further rundown. So that's a bit of a risk to IIFL going forward. But at the margin, given the valuations at 1.2 times or close to 1.5 times on FY27 price to book, it's attractive. So that's the key reason. One, they believe that earnings are going to improve. And two, the two biggest segments, which is microfinance and gold, that HSBC believes is likely to improve from here on, and hence a big upgrade coming. So that's the reason why the stock is reacted 5% after the recent up move.
Okay, IIFL definitely doing well today, 4% higher. Nimesh, thanks for that. But do come back soon because we want to, of course, know about Chatter and everything that's going on. Yesterday told us about, a couple of blocks that could be happening, and that happened. So coming back to you in just a bit. In the meantime, let's get you a snippet from our digital offering, Market Cafe. This week, I caught up with JP Morgan India Head of Research, Sanjay Mukim. Now, JP Morgan as a house is betting big on the Indian urbanization story. They think that this is a mega theme, a mega trend that can drive not just GDP growth, but also, create sizable investment opportunities as far as Indian equities are concerned. Take a look at how specifically JPM is looking to play urbanization in India.
Developments in the last few years are very encouraging because smaller cities, other cities across the country are growing very rapidly. You go to any state capital and you can have a view on the economy in that state, doing well, doing badly, doesn't matter. The real estate market, even in the slowest state, is very, very strong because of migration. Right? So this urbanization is a very strong driver of India's economic growth. And it is what will support the migration of labor and drive a services economy as well. If you look at, let's say, the US, which is an ultimate service economy right now, I mean, they want to go back to manufacturing to some degree, but this is it's not everybody doing technical jobs. It is teachers, doctors, nurses, government administrators. Those are the bulk of your jobs in the economy. And again, that cannot happen in a rural setting. So what I think India has been doing, and will probably be a bigger driver of growth than manufacturing deltas, which should still be positive, is the urbanization theme in the country.
Urbanization.
Right.
And how do you play that? I mean, I understand the concept, but what kind of companies are the best play? Because it sounds pretty vast, the whole theme. Yeah.
And there's a lot of associated things that should benefit from urbanization. One, of course, very obviously real estate. Okay. There is this data from a few years ago. If you look at the per capita constructed space in India, not land per person, but floor space of residential, all India per person is about 10 square meters, 100 square feet. Okay. It's like a jail cell. Okay. Tokyo, which is the densest urban city in the world, is twice the India average.
Wow.
Right. China is 4x the India average.
Okay.
And I won't even tell you what the US is. Right? Because we have not built enough homes for a variety of reasons, right? Policy and culture or whatever you call it. But if you were to take that 10 square meters Surabhi and grow it to 15 square meters, still lower than Tokyo, I would need a bare minimum $2 trillion worth of steel and cement.
Wow.
It's massive.
Just to build so much of real estate, so much housing.
Yes.
Okay.
There is almost infinite demand for all of this. So real estate, housing construction can be a very big theme in India, and it drives growth because as you demand more cement, as you demand more steel, as you demand more appliances, that drives other demand in the country as well. Okay. So I think that can be very, for a longer term investor. Of course, the debate will be which company is doing it, which is not doing it, those are other issues. Education is a very, very strong growing sector in the country. Okay. The data, top-down data on household spends on education are very robust. Okay. Very difficult to find stock plays.
Yeah, stock plays, because in the listed universe.
Yes.
Yeah.
But when you look at the category spend, education is doing very well. Wow. Healthcare similarly is very, very robust. Now, because of sampling issues, you will assume that everybody goes to private hospitals. No, the penetration of private hospitals, even in urban India, is extremely low. Okay, a majority of people still use the public healthcare system. And as incomes rise and as the country urbanizes, you should see the services of private healthcare continue to grow at a very high compounding rate as well.
Okay, so let me recap this. So the ways to play the great Indian urbanization story, real estate could be one straight. Materials, steel, cement, which will be used in building that whole piece, and healthcare services.
Healthcare
and education. Services, you say.
And I will throw in one more, which we may be ambivalent on how we approach it, is the consumption of processed foods.
Oh, okay.
Right. Now, people who've evolved to a certain degree of income realize that processed foods are bad.
Nothing out of a can, as they say.
Yes. But as incomes rise at the lower end of the income cohort, the aspiration for processed food is very high. Because I could not afford a packet of chips when I was younger, I will provide it to my kid, right? And this is a conversation I've had with doctors in rural India, that they're facing malnutrition problems because the kids are now consuming a lot more junk food. So again, like I said, you will be ambivalent about how you think about it, but the consumption of processed foods in India is growing.
And in rural India, it's really growing. It might be peaking in urban centers.
That's right. So there are a variety of ways that this urbanization, the J curves that are hit when incomes reach a certain. There's a variety of categories that do very well.
Big theme that JP Morgan is bullish on. There are several others, and we discuss, of course, earnings as well, and whether structurally there's an earnings slowdown in India. That episode is dropping on YouTube tonight, and then eventually it plays out on television as well. So don't forget to catch it 7:30 on YouTube. You can hear the entire conversation. But for now, it is time for D Street Chatter. As promised, we have Nimesh back with us. Nimesh, so a slightly, cooler day, taking some steps back after yesterday's rally. What's the latest you're picking up?
I said, I would call it more of a consolidation day. We saw yesterday a big move, right? I mean, a lot of the Nifty stocks were up 8-10%. And unfortunately, we didn't see a very large FI or a DI number yesterday. The feeling was you'll see $1 billion kind of buying, and that didn't turn out to be. So it looks like yesterday's rally was more of short covering. And we've given us some of the gains in sectors like IT and Pharma today. So Pharma is actually doing good, but IT has given up. Even today, the sense is that the flows are quite mixed. There is buying, but it's very selective, both in the large cap as well as in the broader markets. The broader markets have actually done much better today, up 0.3%. So that seems to be a bit of a catch-up happening in the broader market stocks, at least in today's market. Look, today's FI data will also look a bit skewed because of the two large block deals, and that will have an impact on the FI DI number. Outside of that, I haven't heard any large buying or large selling from larger institutions. So there's a lack of participation as well. We have the MSCI rebalancing tonight, which will have an impact on many individual stocks. Plus, I guess there's going to be a buying of close to $1 billion because of the rebalancing. So that's going to be important to track. But net, a day of consolidation with a bit of bias or the move shifting towards the broader market stocks.
In terms of specific names, Nimesh, what's on the list?
Well, Prashant, so I'll continue with the theme of block deals. So the first stock in my list is Asian Paints. The stock has been under pressure for various reasons in the last couple of quarters and weeks. Now there is a buzz that there could be a large block as well in Asian Paints very soon. So that's adding further pressure on stock like Asian Paints. So that's the first name. The second stock is Zota Healthcare. The overall Pharma has done well today, but Zota stands out. Good up move in that name as well. The volumes on the higher side. I understand a very large leading domestic AIF has been an active buyer in Zota of late. So there was a fundraising as well. A lot of large investors did put in money in the QIP as well in Zota Healthcare. So that's the second stock. The third stock is Granules. Again, a pharma name doing good today, is buzzing in trade. For Granules specifically, I understand there was a selling pressure from a large FI fund. That seems to be largely over in the last couple of days. So now there is a bit of fresh buying as well. And the selling overhang seems to be out of the way. So that's the reason why Granules is buzzing in trade. And the last is UPL. We saw a bit of a reaction in UPL yesterday as well after the earnings and the management interview. But I guess the stock is under pressure again today because of very aggressive selling. So expect high delivery volumes on the sell side in UPL today.
Okay, all right. Thanks a lot for that, Nimesh. Well, let's get in Mr. Pashupati Advani, founder and chairman at Global Foray, who joins us on the show. Hi, Mr. Advani. Good afternoon. Good to see you, and thanks a lot for joining in. I believe you're overseas, but we're lucky to have you. Well, Mr. Advani, how are you feeling about the Indian markets? The markets went down to 21,700. We have bounced back a good deal. And, in this period of time, we have gone through Trump's tariffs, the skirmish that we have seen on the border, and earnings as well haven't really picked up. Your outlook about the Indian markets from here on?
Well, everyone is saying that Donald Trump bought the index at 21,000. So I guess we have to follow him. Now, jokes aside, I think that, the market has been going up and down on news, some real, some false. Right now, he's taken the gas off the pedal on the tariffs with China. And, the information that's coming out is so mixed that it's very, very difficult to get a handle on what's really going on. So the only thing to do is to say, okay, I'm in the market, I'm going to be there. I'll just, if I've got money, I'll buy more of what I have. If I need money, I'll sell a bit of everything and just be participating, because I think it's very, very difficult for us to manage the kind of machinations and movements that we've had in the market. Yesterday was crazy. Today we've given back, half of what we went up yesterday. So, who the hell knows what's going on? And as Nigel said, that the FPI and DI numbers yesterday were not much to speak about, even though the market jumped up a lot. So, I don't know what today's numbers are going to be like, but certainly what I am seeing is a company like ANT saying, I want to now sell some Paytm. And, we had some momentum. So now they're going to sell 4% of the company, which is a big sort of outflow. So, I think those are the kinds of things that are going to happen. So the trend is there that whenever there are jumps, the foreigners seem to be bailing.
Okay, all right. And today as well, the flows are going to be skewed because we had a couple of large trades, as you mentioned, on Paytm and a couple of others. So we won't really get a clearer picture out there. But I'll tell you what, Mr. Advani, in the last few days, last 10 sessions or so, a lot of smart HNIs were raising money. So it seems yesterday, the buying that came in was from actually the retail as well as the HNI audience. That aside, we want to know what are your top picks. In the past, we've spoken about Paytm. I recall we spoke about, an infra name, J. Kumar Infra, if I remember correct. Tell us what's new on your radar and name a couple of stocks for us, please.
Well, it's kind of difficult, but, I think that, this market is a market which is kind of event driven. So, there is a point at which it's probably worth taking a punt on IndusInd Bank, but this is a punt. This is not a real recommendation per se. The infra companies are still continuing to do well because there is a lot of business going around. But I think that, they should continue to be invested in because that's not a sector that's going away and it's being driven by government spending. So I think that, I took J. Kumar because it was an interesting stock at that time. It hasn't really moved in the last month or so, but I think that, it has done well from when we started getting in. But I don't know, it's very, very difficult to predict actual stocks and actual sectors. And, a lot is going to happen when China's tariffs with the US settle, because once those rates settle, then, say, for example, our chemicals may be back in business. Now, it's gone back to 30%, our chemicals are going to be sidelined for a little bit. So it's trying times and it's very, very difficult to just this thing. But I do not like IT. I just feel that the US is closing the IT doors. The H-1Bs are going to get more and more difficult. And a lot of AI is coming into play. And so, I think they're going to be hurting. And I don't know what this new information on Pharma has been, that, we're going to start buying generics at Indian prices. Yes. Let's see if President Trump can actually make that happen.
Okay. All right, Mr. Advani, a short but crisp chat as of now. I don't know whether we'll see 21,700 odd, but you have given us a hint who was the buyer at those levels. And in fact, from the infra names, you continue to like J. Kumar Infra. From the banking pack, IndusInd Bank is what you like, while tech is something you choose to stay away. Thanks a lot, Mr. Advani. Have a good holiday. And when you're back, we'll have a longer chat with you.
Thanks, man.
Well, Mr. Advani briefly mentioned chemicals, and I think SRF are getting some important commentary from the con call, and our ticker team is putting it up. The chemicals business is likely to grow by around 20% in FY26, and they're saying that they'll build on momentum from there on. So that's why you're seeing a bit of a perk up in the stock. The initial commentary was a little bit subdued, but from there we have seen a bit of a recovery because of this line that's flashing for you on the screen. Chemicals business set to grow by 20% in this fiscal and build momentum from there on. Slip into a short break, come back. I think we'll have Jay Bala of Cash the Chaos. He'll be giving us his technical trades.
Okay, welcome back. Let's get the price action analyzed a little bit. Technicals in focus, right? You heard Pashupati Advani, and he was saying, who the hell knows? Let's ask Jay if he knows. He's, of course, with cashthechaos.com. He was in Goa, and he's back in London. Jay, what's your sense? Price action, purely price action-wise. Yesterday was a very large move. Today we've given back about 40% of that. Is this broadly up and looking to buy the dip kind of a market, or what's your sense? Yeah, go on.
Yeah, thanks, Prashant. I'm anticipating this market to pull back a bit. I don't know if it will come as deep as 22,975, but if the markets can drop to somewhere close to 23,700 to 23,300, that will be a good bullish reset for the market. And this is as far as I see the markets, it's from the price action perspective. This is a pause to refresh. And people have been talking about Donald Trump being moving the markets, but that's not the case. No, we saw the markets top out in September, and we even called the markets to drop on the 1st of October on CNBC-TV18 to drop to the June 4th range. So the markets don't move on exogenous events. The markets react, have their own endogenous reasons to move up and down. And so as far as I'm concerned, the markets is in a bullish space, and any fall here will be an opportunity to buy the dip.
All right. I think the trip to Mumbai and then Goa turned things around. Jay, you've been sounding bullish at least for the last couple of interactions. So good. You believe that you should be buying the dip. I want your view on two asset classes, moving away from equity. One is the dollar index, which has perked up. The other one is Bitcoin. Woohoo. From where to where, right? It breached 80,000 and now it's at 1 lakh. Oh, what's your take?
That's right, Nigel. Bitcoin's price action is very important. It's indicating that animal spirits are possibly back. And if you recall, going through a short interview notes that I've been preparing, I'd said that if Bitcoin were to hold 72,000, that will be a shallower retracement than I had anticipated, and that will be a good possibility that Bitcoin would go back to record highs. I'm anticipating Bitcoin to touch about 125,000 to 130,000 in the short to medium term. But so that will be another tailwind for the equity markets, because as Bitcoin's price action signals, so does the risk-on indication for the markets. So, and when it comes to the dollar index, it's come very close to long-term support, about 96.5 to 95.5. The low was about 97 and change. I'm anticipating a short-term bounce for the dollar index to take it to somewhere close to 103 to 104, and then possibly come back to retest the long-term support at about 96.5, 95.5.
Jay, the other, just one more global thing. Oil, do you think there is a little more upside? I know your broader, bigger views, but near term, it's kind of felt a little out of sync with everything else, seeing so much risk on. Oil's come up to about $4-5 from the lows, but what's your sense, near term?
Yeah, watch 65.1 on the NYMEX variety. If that's taken out, I'm anticipating Brent, both varieties of crude to rise to about another $10 from that position. So I would anticipate NYMEX to hit about 78 to 82 if that's taken out. So if NYMEX crosses 65.1, that'll be a double bottom. And depending on how it gets there, we can evaluate if that's going to be a longer-term trend reversal or just a short-term blip. But as things stand, I'm anticipating 65.1 to get taken out on NYMEX. And along with equities, I expect tailwind to take crude markets also up.
Okay. That's on the global front. Jay, finally, I just want to ask you about some of these defense stocks, because they still seem to have a fair amount of momentum, even though the headlines have now subsided and the action on the border has subsided. Would you look at any trades or sort of positional buys here at all in this entire basket? Or do you think this is just momentum and it'll fizzle out?
No, I think some of the defense names are definitely looking interesting. And if you look at something like GRSE, Garden Reach Shipyard, they're looking, it's looking pretty good. I was already bullish on Mazagon Docks, but it's a bit late now. Garden Reach possibly could mimic Mazagon Docks movement. And as a sector as such, now I'm more bullish on the capital goods space, where some of the defense stocks are also there. HAL itself might be a good bet there. And besides that, I also like ABB and Schaeffler from the capital goods space. India might not have a equivalent of Dow Transports and Dow Industrials, but I would consider capital goods and autos as an equivalent. And capital goods has clocked a double bottom. And that's actually, we can classify some of the defense name within that. And, probably they're probably likely to clock fresh 52-week highs past what is registered in 2024. I'm talking about the basic capital goods index. So yeah, so even BEL, BHL, they're all looking quite interesting. And they are also components of capital goods index.
Okay, all right, Jay, we'll leave it there. Thank you very much for joining us. Good speaking with you. And we'll talk again. We'll take a quick commercial break here. There's about, 5 minutes to go, 4 to go for market closing. We are back. We'll get you some previews as well and just wrap up things. Stay with us.
Well, last couple of minutes of trade today, well, it's been a bit of a down day. The Nifty is actually going home closer to the low point of the day. So a total reversal of what we saw yesterday. Yesterday, we went to the high point of the day and we went into close at the high point of the day. Today, we're winding up at the low point of the day, though we have given up less than 50% of the gains that we put on in yesterday's trading session. What lost out? Stocks that did well yesterday, in fact, came in for profit taking. So IT as well as metals, both of them did see selling. Infosys, HCL Tech, TCS, all those stocks were under pressure. Hindalco, numbers in line. Problem is in terms of the guidance. The globe is still in an uncertain place. So Hindalco was down closer on 2.5%. What did well then from the Nifty pack? BEL, that was up close to 4%. Geo Financial, I'd made this point a few sessions ago that Reliance corrected and then we said Geo Financial that did correct as well. But Reliance bounced back, Geo Financial was yet to bounce back as much. So that one in fact actually did a relative outperformance today in comparison to Reliance Industries. From the broader markets though, plenty of stocks did well and that's why the portfolio will be feeling quite good. So explains why the Midcap index in fact ended well in the green in today's trading session. Few stocks that were in focus. TD Power, that one reacted to its numbers, good gains out there. CARE, well, solid gains out there because a solid set of numbers is what we had. So that as well went home with gains of more than 10%. Suven Life, well, they issued some warrants on a preferential basis to promoters as well as non-promoters. Big volumes on that one. KPI Green, that's the other one, in fact, went home with gains of close to around 10%. Some of these stocks have seen a sharp correction, but they pulled back big time in today's trading session. Tanla Platforms as well was up close to around 11.5%. So in short, we did see that the Nifty did give up some part of yesterday's gains. The Nifty Bank as well was down close to around 400 points, but it was less than 30% of the gains that we put on yesterday. However, the breadth of the market tells you that it's still pretty much a buy on dips market, going by the kind of action we saw in the broader markets. Number of stocks advancing, 1,800 stocks. Number of stocks declining, just around 800 stocks in today's trade. Well, we'll wrap up on this edition of your closing bell. Stay with us, though. Markets Forward comes up next.